Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Wednesday. It's February 9th. It is the second trading week of February, midweek. Markets are going to open up in about an hour and 37 minutes, 36 minutes to be exact. We're to be specific with you. As you can see here, the markets are up really good, 200 points on the Dow, and that's after closing up over 400 points. And I told you if we break through specific levels, there's a good chance we'll see a rally. The good news is we're just getting ready to break through those levels, and I'm liking what I'm seeing right now. I'm liking it quite a bit. We'll get into that in just a bit. So the big news report, no one really cares too much about this EIA petroleum status report. Energies are making new highs or near all-time highs. The big report's going to be the CPI report, and we're going to determine tomorrow how much the inflationary pressure is impacting consumers on a consumer price data level. That's going to be the big report this week, followed by consumer sentiment. The jobless claims should be okay based on what we've been seeing last week. And I'm very encouraged by seeing the market open up so much. Hopefully, we won't undo this rally by the end of the session, which is what's been going on. Let's talk a little bit about global economy. And remember, today's Wednesday. I always Wednesday give you a hot stock long trade with stop loss, profit target, and I'll give you a short trade with stop loss and profit target. So investors are waiting for U.S. inflation data for signs of how fast the Federal Reserve might pull back stimulus. That's this report right here that's coming out tomorrow. U.S. inflation data Thursday are expected to show inflation rose to a four-decade high of 7.3%. If the number is not 7.3%, that's going to be bullish for the market. If the number is 7.3% or higher, it's going to be terrible for the market, because then the Fed can pat themselves on the back and say, we told you that we don't have any other choice but to raise rates, adding to pressure to control prices. Traders expect the Fed to hike rates at least 4 times this year. Don't hold your breath. We'll be lucky if they do it twice. Smaller companies, which is very, very important, outpace broader market, which is a potential sign that our investors are becoming optimistic again. And earnings are really, really good. They've been actually better than expected, just as I thought they would be. Markets have been volatile since Fed officials said in mid-December that plans to withdraw stimulus would be accelerated to cool inflation that is a multi-decade high. Finally, now they decide to take action. Like the last 2 years, they couldn't do anything. Economists expect tomorrow's data to show U.S. inflation accelerated to 7.3%. That's the target. So if the number is like 6.5%, we can get a really good rally. If the number is 7.6% or 7.4%, don't think so. Tech companies accounted for a nice big chunk of the rally. Chip maker NVIDIA, which is one of my favorite stocks, rose 1.5% after announced that it's not going to buy SoftBank. Retailers, again, very speculative sector, have gained relying on consumer spending to lift the market. Remember, I was talking about consumer discretionary yesterday. Amazon rose 2.2%, Home Depot, and oil is in the 80s now. And I think energy prices will go to 100. It's just a matter of time. Now, looking at individual indices, as you can see here, we're opening up quite a bit. We're opening up 1.23%, which is more than we gained yesterday on the entire NASDAQ. So that's a really good rump. I'm not really concerned with where we're going to close. So I don't really care if we're closing lower or higher. I'm concerned about making higher highs. And right now, even if we close all the way at the bottom, this is a very, very good step in the right direction, because you'll see here, this bar is already above these last 4 bars. And if we can break above this level right here, as I mentioned, we would be in a much, much better position. Looking at the Dow Jones, and they're all looking very similar, and they all have a pivot. This is actually what I was talking about. Look at where we're at on the Dow. We may be opening above that level, or we're actually right at that level right now before the opening. So if we can rally above these levels, we are going to be in a good spot. Let's look at the S&P. And again, the levels haven't changed. I gave you those levels over the past few days. And now here's the level on the S&P. We need to break these levels. Until we break these levels, the market's going to be in a choppiness range. And look at semiconductors. They don't look any different either. They all look the same. It's all in an ascending triangle. You see that? They're all near the upper end of that range. Look at the consumer discretionary. So I'm getting hopefully a little bit more optimistic. Look at that right near the end. I need to see the price go up here. that would be really, really, really bullish. And even consumer staples, take a look at them. They're starting to move up as well. Although they never had such a big downside, I'm expecting these to rally as well. Now, the big thing now is, if you look at this, it says today, but this is yesterday, consumer discretionary and information technology, they're rising again. Remember what I showed you the other day? I showed you Stock Fetcher, and I showed you the 11 sectors. And I explained that here's all the 11 sectors. So here's financial, that's moving higher. Energy looks like it's going to be kind of cooling off the next few days, which is okay as long as the market flow goes into consumer discretionary. Utilities, expect a triangle. Don't expect much with utilities right now because speculative stocks are gaining. Consumer staples are doing good. They're not doing bad. Here, this is this is what I'm getting excited about. If we can break this darn 187 level, there's a chance we'll go up to 200. And look at communication services, nothing, not even a little rally. But basic materials looks like it can go up to about 86. And technology looks like it can break above 164. But healthcare looks good right now. Technology's looking better right now. Industrial's looking better right now. Consumer discretionary is going to look great if it breaks out. Real estate is not looking good right now. Communication services are not looking good right now. Basic materials is actually looking pretty good. So if you want things to avoid right now, I would avoid utilities. It looks like it can be in a doldrum for a while. I would avoid real estate for the next few days or maybe a week, and I would avoid communication sector. Everything else actually looks pretty darn good. I'm liking what I'm seeing. Now, remember, today's Wednesday, and Wednesday I give you guys my hottest stock and my weakest stock. I like banks right now. United Commercial Banks, it's been breaking out really nice, and I think it's going to go higher today, as a matter of fact. I would be bullish till about 40. I think we're going to take out this high and then come up all the way here. And then if it breaks the 50-day moving average, I would get out. So I would get out if it breaks this little bar, goes to the 35.20 level, and I would ride it all the way up to the 40.41 level. United Commercial Bank. And just to give you an idea, this is not a big stock. It's a Russell 2000 stock. And Russell 2000 has been really doing bad. I mean, bad. I thought it was going to start outperforming, but it hasn't. But again, if it takes out this area, right here, we could be in line for a beautiful, beautiful rally. I'm just hoping that this is going to be meaningful because things are looking pretty good right now. They look like they could look pretty good. I hope that makes some sense. Also, we haven't looked at momentum levels in a while. I just wanted to show you how things are looking. Here. This is all stocks trading above $2. And look at how clean it's been moving away from this lower line. Remember, we were all the way here and everybody thought we were going to break down, and I said we're going to go higher. We've been going higher. We haven't been going lower. We haven't been breaking that line. Momentum levels are stable. Look, this is a weekly. Remember, all the way down. We're now coming back up. Let's look at 5 years. See, this is a time Fed raised rates in 2018, and this is the COVID crash. But let's go 20 years. Doesn't go much below these levels. So I don't think the market's going to crash. I think we're actually going to be breaking out. I gave you the long stock. Now here's my short stock, New York Times. And I'm actually going to short this probably for one of my programs right now. I think the stock is going to go all the way down to the 36 level. I would put a liquidation stop right at the 50-day moving average, right at the 44, 45 level. And I would ride this all the way to the 36 level. And I think we're going to hit it. Let's see where New York Times is. No, it's a Russell one. It's a mid cap, right? So short stock, New York Times, NYT. Long stock, let's see, what was our long stock? We just had it a minute ago. UCBI. All right, now, before I let you go, I'm doing something very, very cool today. Very, very exciting, and I think you guys are going to love it. Now, markets have been wild lately, and it's getting harder to find opportunities, especially if you follow strategies designed to work in ordinary times. And that's why I decided to host an urgent complimentary bootcamp today, 1 p.m. Eastern Time. I'll go over tech stock momentum in the QQQ, pending Federal Reserve action, and why volatility levels might have temporarily peaked. Join me today. It's happening today, 1 p.m. Eastern time today, to talk more about the current state of the market and to get my second biggest buy alert ever, and I'll update you on momentum levels and so forth. Click the link below to reserve your spot, and I'll see you guys later today. Remember, 1 p.m. Eastern time. You don't want to miss out. We're seeing very, very important levels are breaking out right now. I think consumer discretionary has a chance, and retail has a chance to rock and roll. Don't miss out. I'll do an earnings update as well. It's happening at 1 p.m. Eastern time today. Follow the link. I'm going to post this video on our YouTube channel at Wealth Press. Go there and follow the link below this video and sign up for this now. And tomorrow, oh boy, you don't want to miss tomorrow. I'm going to give you my top ETF and an option pick to go with it. Who doesn't like that? Follow the link below. Check out the registration to the 1 p.m. session. It's going to be red hot. Bye, guys. Have a great, great day.